Hi there. Thanks for tuning in. Today, we're going to be doing an analysis and valuation of Telefónica Brasil, which is ticker symbol VIV. That's because their main service is called Vivo, and that is the main carrier for a lot of Brazil, basically. Now, before we start, if you like these kinds of videos, don't forget to drop a like and subscribe and hit the notification button. It really helps me out, and it tells me that you want me to keep producing these kinds of analysis videos. Okay? So let's get started now. So, in the market share of mobile operators in Brazil, Vivo is number one, followed by Claro. So, interestingly enough, they're the largest one right now. They've stayed a little sturdy in there in terms of market share, despite some competitors here and there. So, this is great. We are basically looking at potentially buying the largest mobile carrier right now. Now, can they stay the largest? Well, here it's talking about how mobile postpaid accesses are actually growing year over year. Fiber homes are connected year over year. That's great. Their total revenue, EBITDA, net income, all of this is up. Their free cash flow is great, and it's about 17.3% of total revenues. They do subtract a little bit more than I do in my simpler calculations, but they give you this overall percentage that they're converting, and it's pretty great. And it's also great because when they mention these in their reports and in their presentations, you see that they care about free cash flow, that they care about operating cash flow, and they care about having it grow and it being positive. When companies don't have this, they mention income. When they don't have this, they mention either revenue or total addressable market. I like more mature companies that mention free cash flow. So here, the results come from mainly mobile services growth, and then they also have handsets, electronics, data, and digital services, and other stuff. So their fixed revenues are up, their postpaid is up, and their prepaid is up. So something that is actually interesting is, I guess in Latin America, a lot of people do use prepaid services, and they're moving to postpaid. So that's fantastic. Who knows how much of this growth is actually people moving from prepaid to postpaid? I know my first phone was prepaid, and it felt so great to move to postpaid once I had a little bit more income that was reliable. So yeah, this is something that growth is great. The defense of the market share is fantastic as well. And here they're talking about their 5G, where their 5G market share is actually trending upwards now significantly, and they're covering more and more cities and percentage of the population with 5G. 57% of Brazil's population is covered with 5G right now, which is a huge rise from even a year ago. So, this is wonderful. And as long as they can be a leader in that, they're well positioned for the future, even though it's a tricky market. Now, their B2B platform, that's another thing where you know how Amazon has their delivery business, of course, and their shop, but really the big cash cow here is their AWS services. Here it's kind of similar where their B2B platform and their services, their cybersecurity, digital solutions, IoT, and telco stuff is actually super interesting. So, all of this combined makes for stratospheric growth here. Not so much their telco, but all their digital B2B services here makes so much. And in general, you would like this to progress like an AWS, but in Brazil, of course. And if they can position themselves there and to do those digital solutions, not so much like AWS, but all these different cybersecurity, IoT, cloud things, then they have another piece where they can grow a lot, even if, for example, they stop running out of new 5G towers to put that would be profitable, or if they stop running out of people who want to sign up for a postpaid plan as much. So, in general, operating cash flow is on the rise. This is wonderful. Their capex is up by a little bit, but not by much, and their operating cash flow margin is trending upwards, which we also like to see. In general, all these numbers are positive. So, free cash flow it's positive. It did dip a little bit compared to last year, but that's okay. I mean, it's not a huge dip, and some of it is because CapEx grew a little bit. Some of it is just because of slightly other changes here and there. But their net income did grow. Their net debt, because it's negative here, it was paid down. So now they have about zero point 0.5 times EBITDA in net debt, which is pretty low actually. That's pretty nice. And we want low debt to EBITDA ratio because in the case that they liquidate, you, the shareholder, get paid last. So if they have a lot of debt, you're just not going to get paid anything. Their free cash flow yield is 8.4%, so that's wonderful. Now, here, what we see is the long term growth. And here's where we do see some need for caution. So Brazil was in 2014 all the way to pretty much 2018, 2019, kind of in a recession. And here you see big negative numbers, big positive numbers, big negative numbers for 4 consecutive years, and now big positive numbers again. So Brazil is a tricky market, honestly. It's not like it's all roses and unstopped growth here. They have very tough years. And some of that is the nature of the market here because Brazil is very tricky, and other things may be mismanagement, maybe the fact that they didn't always execute perfectly. So that's important to note. Their margins too, their gross margin has decreased, but it's still hanging steady over that 40%. You want to see some margin growth in general, especially in the really good years. If you grow your profits, you should also be able to grow your margins. Why? Because in years where you're down, at least those margins stay defensible. Okay. Operating margin, thankfully, it's still pretty decent, and return on invested capital is positive, and we do like to see that. So, here, I'm just going to look at the average of the last 5 years where I want to see what percentage of revenue gets turned to free cash flow. In general, it seems to be an average of about 21%. I'm going to roll with this 19% number, which reflects sort of what it's like lately. And I just want to be a little conservative. This is different than the 17% that they were giving. That's because this is a simplified version. That doesn't include the fact that they're paying down debt because they can choose to do that one year and they can't do, and another year they can just do something different with that free cash flow. So I'm not including that, and I'm just giving them that so they can then decide with that 19% that stays, maybe they use 2%, and then you get to that 17%. I hope that makes sense. Now, the calculation here is super simple. What we're going to do is in 2024 and onwards, we're just going to say revenue is not really going to grow. That's it. So our perpetual growth rate is 0%. Our growth from 2024 onwards is 0%. So we roughly have 2.04 billion dollars in free cash flow. That's it. That's what they have to work with. Now, my required rate of return is going to be 12.5%. This is basically I'm adding an extra 1 to 2.5% as country risk. Essentially, when you're investing in a market that is considered more risky, you can do it two ways. You can either have a larger margin of safety or a larger required rate of return. I'm choosing to go with a larger required rate of return. So I'm saying 12.5%, 0% perpetual growth rate divided by the total number of shares out. I get a fair value of $10. Now, the net debt, we're going to subtract that because they do have debt at the end of the day, even though they can basically pay it with a year and a chunk worth of free cash flow. And then the value post debt is $8.60. Now let's compare where Vivo is right now, and that is at $8 roughly. So what's it looking like? Well, their PE is actually a little higher than you would expect. It's around 15. Then the dividend yield is close to 6%. And historically, I mean, they've had good times, they've had bad times, good times, bad times, good times, bad times. So clearly, what we're seeing is a company that clearly has points where you can buy it, where I think if it's at $6, I mean, man, you would be hard pressed not to buy it as a great opportunity because even in a bad year, they would still make significant free cash flow. They have never really been negative in free cash flow, even in their worst years. And I think they're able to capitalize on things such as enterprise, even when consumer markets are tough. So, yeah, there is a point to buy, but there's also a point to sell here. For example, when it gets up to this almost 12 level, I think you should consider letting it go. And the reason why is because from there onwards, it doesn't really reflect the fact that it is a company that does grow a lot, but does shrink a lot. So that's why I was going to be conservative here with my valuation model. And I was just saying, let's do no growth and just see what happens. And I get a value above what it is right now. And that tells me, listen, you can buy it when it's significantly below this 860 level. And you should be aware when it's significantly above. So this, if you're a swing trader, I mean, or a value trader, this is probably a very interesting experiment here. So what I'm saying is it looks interesting. So geopolitical and currency risk is what you're dealing with here. The real is going to go through a lot of changes as the dollar weakens, as the dollar strengthens, and I'm compensating for it by forecasting no perpetual growth and a higher required rate of return. But for you, depending on your risk appetite, you may want an even larger margin, right? An even larger margin of safety or an even smaller one if you have a lot of belief in them. Despite this, they end up being very interesting on a free cash flow generation perspective. And they can keep buying back stock, which they have been doing, issuing a huge dividend, which they do have, and in general, just growing the company without reinvesting, paying down debt. There's points to buy and sell. Right now, Telefónica Brasil looks especially interesting below $8. So, in general, cash is king. You can have no growth, but if you have a lot of cash to go, then you can make investments at least. You can, shore up your balance sheet, your defenses, your margins, etc., and then bring more cash in the future. So cash is king at the end of the day. Telefónica Brasil is a great example of that. Now, I hope you got a lot out of this video. Thank you so much for watching. If you want me to look at any other companies, please feel free to comment down below and I'll take a look at them. Thank you so much, and I hope you have a great rest of your day.